You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show.
Glad to be here, Jim. Thank you for having me.
Mark, what's happening on the stock markets this week?
Well, a bunch of cycles came together, and no coincidence, I talked about last week about to beware of the Rosh Hashanah or Yom Kippur pattern. Now, you don't have to be Jewish to believe this, but it's based on cycles and lunar cycles and seasonal cycles going back thousands of years, and it all came in. And we warned last week that you should get out of the market if you're a trader. If you're an investor, I guess it's irrelevant. I guess if you're an investor, you never get out of the market. But so what's really interesting about it is that all markets turn south. Again, this is a trading comment, and many may argue, well, we get corrections in September, October. Well, September was supposed to be a down month, and it was actually a very good month. So that frustrated all the bears that thought that we'd have a bad September. But the 22nd, it was not only the autumnal equinox, but it was also the start of the Rosh Hashanah holiday, which is part of the high holidays that last through Yom Kippur into October 2nd. And it's, triggered by the seasonal, again, the equinox and the lunar cycles that come in this time of year. And there's been studies done going back. Many dispute this, but there have been studies saying that the markets tend to pull back. And it could all be just coincidence that the Jewish holiday is this particular week as all the seasonal cycles and the lunar cycles come into play. But what was really interesting was Monday, Jay Powell, this is the first day of Rosh Hashanah, comes out with a comment in an interview saying, well, he thinks that the markets are overvalued. So that, for whatever reason, became the trigger, and markets turned south immediately after that. It had been basically down for the last 3 days. So this is part and parcel of just a trading comment. I think it's a very powerful one. It's not that was not mentioned in the media anywhere that I could see. And I guess people are afraid to bring the Rosh Hashanah Yom Kippur factor into it, particularly with all the the division in the country and division about religion and anti-Israel sentiment and all this nonsense. So, but in any event, I've known about it in my entire adult life in terms of that coincidence this time of year. Now, you could say there's Santa Claus rallies. Nobody argues about that one. Or there's a turkey shoot around Thanksgiving, or there's an event that's fairly frequent called Turnaround Tuesdays, as market tends to change directions on Tuesdays. And, these are like farmer's almanac type patterns in the market that, that you see repeat over and over again. So nothing unusual that this would work, and it did. So that's pretty much it. Cautious through this week. Not to say some individual stocks didn't do well. For example, Apple Computer today was up 4 or 5 points. I think it just about equaled its recent bull market high today. So there were a couple of exceptions. Not every stock went down, but it's valuable trading insight, and we'll just see how it all plays out. And the presumption would be that we would bottom and resume the bull market.
So it's still buy the dips territory instead of let's head for the hills?
Correct. It would be pretty much just a corrective experience. And, we're still looking for stuff. There are many reasons to be bearish on markets. They've had extraordinary moves. We can talk about all markets, whether it's gold or whether it's stocks. I mean, just, really is history-making type advances here. So, if you've been in the market 40 or 50 years, as I have, you realize there are times where sometimes you just, that's enough to get out. Let's go to cash and sit it out a while. There's been a big move here, and you're never going to pick the tops, and there will always be significant market corrections and crashes along the way. And, we usually get some warnings of those events. They usually don't happen overnight. Every serious correction that I've seen in my lifetime, there were technical warnings ahead of it, so you don't know when it's exactly going to happen, but you get a good sense of it. But there's also the theory that if you've made enough money and, you had extraordinary gains, don't wear your welcome. You know what I mean? So there's nothing wrong with that. And there's a lot of geopolitical issues out there. I mean, we don't discuss them too often, but we got, Ukraine and Europe and the potential for the war to accelerate into a full-fledged World War III. And North Korea is holding one of its biggest military parades, I think, coming up shortly. And, there's just a lot of stuff out there that could, really overturn the apple cart here, so to speak. So next year, could be a real mess on the geopolitical front, and how that affects markets only time would tell. I suppose it could help oil and gold and so forth, but I don't know if the stock market would be so happy about it, but we'll have to wait and see. So these are things that I'm concerned about, but at the same time, we have to try to be objective and look at the numbers and wait for confirmation before doing anything.
What's going on with gold?
Well, it had a little trading top here tied to the same cycle that I talked about. We pulled back here last couple of days. The shares are outperforming the metal here a little bit in terms of their day-to-day action. I think that'll continue to be the case. And I'm actually out of the gold stocks. We took profits in the last week or so. We just exited. They looked extended to me, and we'll look to jump back in here maybe this week or maybe after more of a correction, and we'll just keep an eye on them. I like to ring the register. I've been a survivor in the markets for all these decades, and part of the reason is that there's bulls, bears, and pigs in the market. So I see a big advance and things look a little toppy. You could always get back in. So at the moment, I'm flat the stock market and the gold market and the oil market and all markets. I'm in cash. I think I mentioned last week, Treasury bills, it was a good place to be. So at least for 3 days, I look smart. We'll see what happens.
What's happening with silver?
Silver hit a trading target at about $44, and it also hit a little trading top here. It didn't pull back as much as the gold stocks did, but still a bull trend overall, I guess. I just felt that we hit a trading top, so we exited stage left, as they say. I'm watching right now. I'm in cash.
With cash, how much cash do you think a person should keep handy in case the power goes out or there's some kind of natural disaster?
That's tough call. Depends how much cash you have, available too. If you go to the banks and you start pulling out cash, they start reporting you. They don't like when you take cash out, particularly any sizable amounts. But I guess enough that would cover your day-to-day, expenses, food and rent and so forth for at least, I would say a couple, 3 months. So at least you have some emergency money around, but it makes sense. So, if there's any type of disruption in the internet or any for whatever reason, whether it's because of geocosmic effects like a sudden solar storm or just, sabotage of some kind, and then the systems go down, it's always good to have some cash around if credit cards aren't working and so forth. So along those same lines, you should keep extra food and water too. There could be surprise shortages rise, and a little of the some of that emergency food I keep in the closet. That's good for these big containers you can buy that are good for 2 or 3 or more years. Emergency food, just in the unlikely event something happens. You can get a power outage if you live in certain areas, like in Florida, where hurricanes occur, or you're in an area with an earthquake activity and there's loss of power and water. It's always good to keep something around. So, there are places I think or sources that are better answering this question about how much you should store and have, but good idea to do it. Good question.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's happening on the cryptocurrency market?
Oh, the crypto's topped out last week or so. Bitcoin itself has been all over the place here. It got down, in fact, today, Thursday, just above 108,000, and the 107,800 is sort of a support area for at least Bitcoin, followed by the 98,000 level. So from a trading perspective, we want to see this current level hold. But I think, the cryptos move like gold, like stocks, part and parcel to what's happening in the Treasury market. We didn't discuss this, but, in the last couple of days, the yields on the Treasury year long bond have gone higher. Rates have actually gone up, despite the fact the Fed lowered rates a quarter point, as we talked about in the last week. So we also talked about how there's a non sequitur between what the Fed may do and what the Treasury bond market might do. So when rates start to go up, that makes markets nervous, makes crypto nervous, and I think that's part of it. And if rates really, start to take off here, which the stock market is not going to like, and the building industry and the building stocks aren't going to like, we could experience, a bit more serious correction. Of course, we're still in that general time frame where it could happen. So it's interesting. But crypto itself, is volatile with the markets. It depends on market liquidity. And if rates are up and, things become less speculative, let's say that way, more free money around, cheaper money makes these markets accelerate. So let's see how it unfolds here. But this is not an unexpected time frame. What's happening here, not only the Rosh Hashanah Yom Kippur event, we're in the seasonal time frame. All of us remember the October crashes, most notably the 1987 event and others. So, anything could happen this time of year, and it could be triggered by, financial events like interest rates suddenly going up or some unexpected, let's go back to, way back to, 9/11, that was in September. Of course, now we're end of September. So we're in this precarious seasonal time period, and you just about can expect some surprises. But my overall feeling is crypto is here to stay. You've got government legislation behind it now, stable coins being created, all kinds of fun stuff here. So I think any weakness is a buying opportunity, and you don't want to see a major sell-off, but if we shake out Bitcoin and it goes down back under 100,000, it might offer just another great trading opportunity. So, and that's only one of many. Obviously, we can talk about dozens of different cryptos that are out there. Plus, there's a bunch of ETFs being registered with the Securities and Exchange Commission for cryptos. One of the most notable names is XRP, which I'm sure you've heard of. I think there's about 18 ETFs in registration now at the SEC to begin trading in the next month or two. So when these things start trading, it creates demand for the crypto. So as people start, or institutions and individuals start buying these ETFs, they have to go out and physically obtain the underlying crypto, just like when the gold ETFs were created. Once you start buying the gold ETF, money managers running it had to buy gold. So it's a bullish trigger that's growing and growing here day to day, and got to keep that in mind. So I think there's some statistic out there, if I can recall correctly, the number. I mean, it's like 1% or 2% institutional allocation into the crypto market. I mean, it hasn't even started yet. I mean, if it gets up to the 5% that we normally hear for gold and other places, I mean, that's hundreds of billions of dollars of money that's going to come into this market as these new ETFs start trading and as the legislation kicks in and The government starts putting together the crypto reserve and the Bitcoin reserve. And again, this could stretch through next year, so it doesn't all have to happen tomorrow. But we do have the blockchain letter, and I urge listeners, if they want more about what's out there and what we're interested in, to subscribe to that at VR Trader.
Anything going on with uranium?
Uranium has been doing terrific. It blew off here, last couple 3 days with the market a little bit. Some of the more speculative uranium, the ones particularly creating these small nuclear reactor companies, just sort of blew off to the upside and started to pull back here a little bit. My personal feeling is it got ahead of itself. It's smart money seems to think that a lot more money is coming into the nuclear generation field. Companies like GE Vernova, which makes many of the big reactors, claims that they can't keep up with the order demand. Though they did get hurt though, because the Trump administration poo-pooed, or at least indicated they didn't care too much for the wind power aspect of energy. And GE Vernova is one of the big companies that provides the, instrumentation and physical facilities for the wind power thing. So that sort of hurt the stock here a little bit, but a lot of their business is the nuclear. I mention that because the stock is around $600 a share, and some analysts think it could double or triple from here with the demands for the big nuclear equipment. But the trend's your friend. I just think they're extended. I just think a lot of money has been pushed into the area, and it's like over-enthusiasm to a certain degree. So I'm not chasing them. I mean, look at Cameco, which is the big uranium provider. I mean, it's gone from $25 to $83 this year. I mean, that's pretty big advance. So I'm just I trade them. I'm not super excited about them at these prices, but if I see a decent pullback, we'll take a look at them on a trading basis. But the mentality is out there is that the energy generation is the answer to all our energy problems, and a lot of money is being thrown that way. But it could be like when the .coms came in 25 years ago, too much too fast, so wouldn't chase them.
Anything happening on the geocosmic front?
Well, we just had a bunch of stuff, and of course, with the seasonality, autumnal equinox here on Monday, and we had a lunar cycle this past weekend. We got another one coming up on October 7th. But according to spaceweather.com, sort of interesting, I put up a story earlier on it, and apparently there's a bunch of solar sunspots floating on the surface of the sun, but not creating any imminent danger. The thinking is, if you get a lot of the spots, particularly they face the Earth, that create a lot of the CMEs, and that can create problems here on the Earth. But the comment was, we got a bunch of them floating around on the surface, but they don't seem to be a negative form of, in other words, not large enough, I suppose. So that sort of calmed down. But just keep in mind, we've been in the time frame for a lot of geocosmic stuff. I mean, we had a solar eclipse just recently, and we had a lunar eclipse not too far behind that one. So just been a lot of stuff going on, and we've got a comet out there that you can track it at the spaceweather.com website. It's a very, very unusual large comet they're tracking now. Just a lot of fun stuff going on in the geocosmic sphere, but I just think it's more than fascinating that a lot of the stuff was synergistic and came into a time frame, and markets reacted as I was expecting. So this is why I do it, because the stuff works. Anyway, there has been some effect here, and it should be dissipating, I suppose, as we move through October, and we'll see how it plays out. So hopefully for the better.
Mark, thank you so much for chatting with us.
Thanks for having me. Take care.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was speaking to us from Arizona. If you have any questions for Mark, you can send them to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.